Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to talk to you a little bit about what we're seeing in the crop markets here as we go into mid-December. Now, it's this time of year where we sort of know how big the crops are, they're harvested, and now we're looking to see how the demand structure changes as we move from concentrating on what supplies we're building up to be to what demand can build up to be as well. And USDA gave us an update on that as they've moved forward this year. And so here, typically in December, what we see them do is in the December outlook is they provide us a brief update on what they're seeing in terms of not only demand here domestically, but also internationally. And what we saw was, let's call it a mixed story as we sit here in the middle of December, with corn seeing some gains in usage, but no changes being projected as we look for soybeans. And so let's walk through those. So as we're looking at the projections that USDA laid out there, the idea is we'll concentrate on the 2024 column here in the table because that's the marketing year we're in right now, and that's the one they updated. Now, I've also got the 2025 column out there showing what USDA is projecting for next year, but they did not make any sort of adjustments to those projections. And in fact, they won't adjust those again until we get into February, once we see a few more months worth of data to come in. And it's also when they release their Ag Outlook Forum, where they provide, again, a sort of update writ large on agriculture. But here in December, yeah, it's the 2024 column that we're really going to concentrate on here. And USDA really only made two adjustments, but in this case, they were both positive in terms of corn usage. The first one was they added 50 million bushels to the ethanol line here. It's circled there in red there at 5.5 billion bushels. So adding that 50 million bushels there has brought that number up to a record level. So in this case, we've never used more corn for fuel than we are currently doing right now. And so that is helping promote healthy usage of corn through the fuel market. We're already seeing fairly good use on the food side, feed side as well, as you look there. And so demand has been building over the last couple of years. And so ethanol stepped up to take that record. But arguably the big change was what we saw for exports. And so with the export line, they ended up adding 150 million bushels, raising that up to 2.475 billion bushels. Now, in this case, that's not a record. We actually set the record for bushels back in the 2020 marketing year. But if you look there at 2021, that had been the second biggest. This update pushed 2024 just past 2021. So again, we're seeing growth across the board basically as you look at what USDA is saying year over year. Feed demand up, fuel demand up, export demand up. And so that has led to record net corn usage as you look down there at that total use line of 15.19 billion bushels. And that lowers those ending stocks. Crucially, here in this case, it means that ending stocks may actually be dropping as we move to the end of this year. When we finished out 2023, we had a little over 1.76 billion bushels of corn left in storage. As we look forward to next August, USDA is saying we'll have 1.74 basically. So just a little bit below, showing that usage was enough to eat up all the production that we created this year. Now, despite that positive news, USDA did not change their outlook on prices. They kept the season average price for 2024 at 4.10 a bushel, down 45 cents from 2023 and down significantly if we look out there at 2021 and 2022. But what this also does is it really does support what USDA projected for 2025, that corn is building more usage out there, and therefore it's likely going to pull area towards it. And so as you look at the 2025 numbers, USDA expects higher corn plantings, little more corn production. And then the question will become, how do they update the demand as they look out to 2025? Will we continue to build on the gains that we've had this year? Now, in the case of soybeans, there weren't any real changes on either the supply or the demand side of the market. And that was a little bit of a bummer for the soybean market. I think there was some hope we could see some adjustment on the export side. We have been gaining a little bit there, but USDA held firm in that number. In fact, the only number that they changed was the bottom line number there on price. When they looked at where the market has gone versus where their projections were for 2024, they ended up lowering that season average price by 60 cents, dropping it down to $10.20 a bushel. Again, I think it's an adjustment that sort of helps support what they're saying as they look forward in 2025. With the lowered price there, you would expect we might pull back some on plantings. That's exactly what they project for 2025, where we drop by nearly 2 million acres. That doesn't necessarily cut back on production, though, depending upon if we get close to trend line yields, but it does bring up this idea that we're not seeing the usage growth on the soybean side like we're seeing in corn, and therefore corn is likely going to gain area that soybeans will lose. Now, overall, like I say, a lot of this depends upon the export adjustment here. And as I mentioned, with soybeans, we had some hope that they would raise that number, but it didn't happen. What hope was there? Well, as you look at the red line in this chart, you can see that's the export flow so far this year. And when you look at that, we have gained from where we were last year, and we've gotten back up to our 5-year average. So we've been slowly gaining back some of that international demand that we had before. Now, we're not nearly at the levels that we had 4 or 5 years ago. In this case, the gray line there represents those record exports of 2020, but at least we're headed in the right direction. The biggest challenge has been, you've got to look at where are your major markets and which way are those markets moving. And in the case of soybeans, the major market is China, and the problem is that market has been moving down for the past several years. While they remain our top export market, we have seen those exports drop over the past 3 years by about 31%. So it's been a sizable drop in our soybean shipments to China, and we haven't been able to find enough other markets to necessarily gain back those sales writ large. As you look, though, at those other markets like Europe, like in the Middle East with Egypt, even in Southeast Asia, like with Indonesia, we are starting to gain. In fact, as we look year over year, we are up. But it just shows how hard it is to replace a market like China. But it sort of can be done. It just takes quite a while to do it. And one of the reasons I say that is because when you look at the corn market, arguably it's been going through the same thing. In fact, you go back to 2020, and China was again the number one market for corn as well as soybeans. But now they've dropped off very significantly. In fact, our export sales to them are down over 80%. Yet, when you look at that red line, not only are we above average in terms of our export sales, we're approaching those record levels back when China was our biggest market. So we have been able to find other markets to help replace that Chinese demand. In fact, as you look at our corn export sales so far this year, China's lurking down there in that other box down there. Basically, it's small enough now as our 24th largest market that I have to put it with the rest of the world. And Mexico has reestablished itself as our biggest market. You've got Japan number two, Colombia number three, Europe number four. But as you look across all those, in this case, the six largest markets we have for corn right now, they are all positive and up significantly as we look there. And so we have been able to piece together enough other markets to help offset the losses we've been seeing in China. And that, I think, is why you're seeing corn have an easier time right now. They were able to put together sort of a coalition of customers that are big enough to sort of match what the Chinese market was for us. Whereas if we go back to soybeans, we haven't been able to gather that larger coalition yet because China was such a dominant player within that market. And so, with the export picture we got there, that did provide a little bit of a boost to the corn market, and soybeans got to ride along with that for a little while here. but we're still not talking about levels that really take us back to where we were a few years ago. It's more like trying to find a stabilization point, sort of, if you will, make sure that the bottom is in this market and work our way up from there. So as the markets closed here in mid-December, what we see is that the markets are sort of projecting a season average price of 2024 at around $4.20, which is about a dime more than what USDA had. As they look forward to 2025, they're offering something in the 430 to 440 range, or sorry, 430 to 440 range, which is 30 to 40 cents better than what USDA is projecting right now. And I think a lot of the strength that's being reflected here in the corn market is based upon that export demand we've been able to build. At the same time, too, though, the markets are more pessimistic as they look at the soybean market. USDA's estimates are 10.20 for 2024 and $10 for 2025. The market here is basically saying 970 as it look across those 2 years, so basically maintaining relatively flat pricing. And I think it's because of the concern that it is really hard to replace China within the US soybean market. While we've been making gains, those gains haven't been large enough to fully offset that hole. Well, with that, I want to thank you for your time and patience. I say that's been a brief update on what we're seeing here in December. As we look forward, USDA will provide an update on ending stocks for our crop, or I'm sorry, grain stocks for our crops. As we get to the end of December, we will also get an update on crop production. Final numbers come in for the 2024 production year in January. And so that will really help us set the stage for will we start to see and continue to see some growth out there for both corn and soybean usage to help maybe look for some pricing to build up higher as we move into the spring and early summertime. With that, my name is Chad Hart, Extension Economist of Iowa State University. Thank you for your time.